The art of not trading. Now, welcome back to my second YouTube channel, the channel that will make you rich if you listen properly. Now, I trade inversion fair value gaps. I have over 38,000 members in my Discord, and I live stream myself trading every single day. For the past 2 years, I have been teaching people how to become profitable, okay? And let me tell you something, the way that you're going to become profitable is not by taking the winning trades. Anybody can do that. Anybody can see a fair value gap that has been inversed, they enter into a long position and then hold for the take profits. But not what everybody can do is stay out of the losing trades and understand that even though a winning trade can win, it might not be a good trade to take. Now, I'm going to be doing a trade example and a trade recap from today, Wednesday, the 25th of August. And in today, we took 0 trades. So you might be wondering, Louis, you took 0 trades. What on earth is there to make a trade recap about? Now, if you want to become a profitable trader, you need to understand that if you want to make serious money, you need to be able to identify the difference between a bad trade setup and a good trade setup. You need to understand when to stay out of the market and when to enter into the market, when to be more aggressive in the market and when to be less aggressive in the market. And right here, if we look at the daily time frame, so let's start today. Of course, every single day you want to get your daily bias. We do not use trends, we use a daily bias. We look for fair value gaps that are being disrespected, and we look for fair value gaps that are being respected. As you can see right now, price is currently respecting all of these bearish fair value gaps. We're respecting this bearish fair value gap, and price is currently respecting this bullish fair value gap. I call this no man's land. Nothing is really clear on the higher time frames. Yes, we've inversed this bullish fair value gap, we could come down. We could also respect this bullish fair value gap and come up, or we could respect this bearish fair value gap and come down. What we are really waiting for is a fair value gap to be disrespected. So either a bullish candle close above this bearish fair value gap or a bearish candle close below this bullish fair value gap. Once that happens, we will have a lot more of a clear bias going in a certain direction. But as you can see right now, nothing is very clear. Same on the 4-hour time frame. Well, actually the 4-hour time frame is a bit more clear, but so yeah, this is the price action from the day. So as you can see, we have inversed this bullish fair value gap, right? We can't actually see that in live time. So if we're trading today, this is what the price action was looking like. We can't see if we are respecting this bullish fair value gap. So as you can see, we're respecting this bullish fair value gap, but we are also inside of bearish fair value gaps. So whilst we are respecting this bullish fair value gap, and this is the price action, we can see it open, we don't necessarily know if price wants to come down yet or respect this fair value gap and come up. So again, we have to be patient. But at 10 AM, we end up inversing this bearish fair value gap. So if we drop to the lower time frames, the only thing that is clear is that the 4-hour time frame has inversed this at 10 o'clock, the 4-hour fair value gap is inversed. Meaning that now the highest probability of what price action should do is come down and take some sort of sell side liquidity. Because again, we've got a bearish candle close below a bullish fair value gap. Same on the 1-hour time frame. We've got this bearish candle close below this 4-hour fair value gap. So if we're looking at this chart, where should price action most likely go to? When we inverse a fair value gap, price should either go to an unmitigated fair value gap or a draw on liquidity. As you can see, we have no unmitigated fair value gaps. We only have lots of sell side liquidity draws. So this is statistically where price action is most likely going to go. So keeping that in mind, we drop to the lower time frame. At the start of the day, we get some potential long positions. We actually firstly get a loss that we avoided. As you can see right here, this play happened at 9:47. You might be wondering, okay, we have this bearish fair value gap, we have inversed this bearish fair value gap, why would we not enter into a long position here? Because we have got the inversion. A few reasons. Firstly, we check the 3-minute time frame. We are still respecting this 3-minute bearish fair value gap. So even though we've inversed the 1-minute time frame, because we have not inversed this 3-minute, price can respect this 3-minute and come down. And no, because of the higher time frame analysis, the 4-hour and the 1-hour, my analysis is that price action is most likely going to come down and at least take these lows here, okay? So that's why I will not be interested in long positions. As well, I'm pretty sure ES did not inverse this fair value gap, and as you can see, this trade failed. So now remember that this trade failed mainly because the higher time frames well, my bad, the higher time frames wouldn't have actually inversed at this specific time, but we were very far below the 4 hour and the 1 hour, so we have a very good idea that they are going to inverse. And as we come to 10 a.m. So right here, this is officially where the higher time frames have inversed with close below that 4 hour and below that 1 hour. And again, you might be wondering, okay, let's look at the 3 minute time frame. We have a bearish value gap, we've inversed this bearish value gap. Why would I not enter into longs here? The reason why I would not enter into long positions is the exact same reason I did not enter into these long positions before. The higher time frame analysis is telling me that it wants to be more bearish. So just because we've got a candle close above the 3 minute, and still here we're expecting a 4 minute, but even when the 4 minute gets this candle close above, I'm not confident in taking longs here because of the higher time frame. Now, it's so easy to enter into longs, target the highs, and be like, oh yeah, look, I took a nice winning trade. But no, just because the price action has went up here, this does not mean that this was a nice long position to take. You need to be consistent when you are trading, and you need to become profitable. The way that you're going to do that is by avoiding and staying disciplined with your higher time frame analysis. And because we think that price action was going to go down, we simply avoid these trades. And as you can see, the rest of the session, we sadly just do not get any more trades. There is actually another potential long position. Now, this is probably the best long position that I've seen the whole day. Why was this potentially the best long position that I've seen the whole day? The reason being, we had 15-minute equal highs above. So whenever we have equal highs on the higher time frame, these 15-minute equal highs, they are just a very, very strong draw on liquidity where price action is going to be drawn to. Because we became so close to these 15-minute equal highs and they are more relevant now, I think that this is a very good target, and it still is if we haven't swept them, because again, I'm recording this after the session. This is a very nice draw on liquidity and where price action could potentially want to go to. So you might be asking, okay, we inversed this fair value gap. Did I enter into this trade? No, I did not enter into this trade. The reason why I did not enter right here on this candle close is because ES did not inverse this fair value gap. Remember, when you are trading, you need to trade with two correlating pairs. ES did not inverse this fair value gap. Therefore, I did not enter into long positions. And look what happens. We avoided another losing trade. Again, these trades, the losing trades that you see me avoiding, are more important than taking the winning trades. It's towards the end of the session right here, 10:47. I could have easily whacked on a long position, targeting the highs, and just got impatient basically. But no, you stick to your plan. I know that we just didn't get a right trade entry there, and look what happens. We just consolidate for the rest of the session. It is 11:30 now and we consolidated. So boom, not only do you avoid the loss, you also avoid all of this consolidation, and you should be happy whether you take a winning trade, whether you don't enter into the markets, or you take a losing trade. You should be happy no matter what happens. And although I didn't catch this massive long position, I am more than happy because I stayed disciplined and I stuck to my higher time frame analysis. If you do this consistently, then you will become profitable. If you want to learn directly from me, then click the links in my bio. I have my mentorship and I have my live streams. If you want to seriously level up your trading, then you do not want to miss out on these. Thank you for watching this video. If you made it to the end, comment below. I'm giving away one funded account, and I will see you all in the next video. Make sure you subscribe.